I guess I'm going to ask you the same question. You probably answered a lot since you put out the news release about a week ago, which was why did you do it and why those terms?
Well, Matt, it was expensive money, but as I've said to you multiple times, I said to our shareholders, we want to be on the front foot rather than the back foot. We're very encouraged with the announcement that the government's planning to buy uranium again. It's the first time they've been buying or planning to buy uranium since like 1983. And so we want to be as ready as we can be for that because we think we're best positioned to capitalize on that. But the other thing that probably a number of people didn't understand or realize that we had a convertible debenture that matures at the end of 2020, and it became a current liability at the beginning of this year. So we wanted to be in the position that we could show that we had enough funds to cover that at our own own terms and own abilities without having the convertible drive us. We want to be in the position to drive the convertible.
Okay, but that convertible, did that contribute towards Cantor being able to negotiate quite tough terms with you now? I get the point that if you didn't, your negotiation stance towards the end of the year is going to be pretty difficult. I've been there myself, but were they pushing you hard now because they could?
No, look, it was our decision. We weren't being pushed. We discussed it certainly at board level quite extensively, and we just decided that again it was going to be better to go now and get the funds and be ready for the future. So, but no, look, it's nobody wants to get into a financing that. And I want to say that it was a bought deal. It was straight common shares, no warrants. But nobody wants to be in a financing that pushes the share price down like it did for us. But again, we believe we're in the strongest position of anyone else, and we think there's other people are going to be going to the market probably quite soon, and we wanted to be there sooner than they were. And and as I said, this announcement by the government to buy uranium. No one is in a better position to capitalize on that than Energy Fuels.
Okay, lots of questions. Sorry, and I'm going to throw these at you in no particular order. Okay, you keep saying the word front foot. What do you mean by that? Are you talking about being able to capitalize on the DOE announcement? In which case, what do you know that we don't?
Yeah. No, I think that the demand and no, we haven't heard the whole story yet out of the working group on terms of the whole 3 steps of the nuclear fuel cycle. So we're still hopeful that there's more to come here, but we want to be in a position that right now the government's announced that this $150 million of this this strategic reserve, we want to be in the position to get the majority or at least a large share of that ahead of there's going to be a lot of competition for it. But no one has the history, the proven history, and the facilities like we do. UR Energy's in a pretty good spot too because they're a proven producer. But we are in the best position to deliver into that initiative.
Okay, so you're making a bet. You don't know anything that the market doesn't know. Just so I'm clear.
Correct.
Okay.
We have released everything we know. Okay. About where we are in this process and where the government is in this process. But there have been statements through Secretary Briette and others that there should be additional information forthcoming on the working group's findings in the next few weeks or so.
And you're expecting more money to
But we've also been waiting for a couple of years for information flow, and it's been delay.
Okay, but you're expecting more money to be mentioned in these future announcements, or more confirmation on the 150 million?
Yeah, I mean, look, we think that the nuclear fuel worker, and I'm speculating a bit here, agrees that they need to do something to reestablish the nuclear fuel cycle, the front 3 steps through enrichment. So we believe that they've come up with findings. I don't know exactly what those findings are, Matt, but we, as I said, What we do know is what they have released, and we want to be in a best position to capitalize on that than anyone else.
Okay, and I want to talk about use of proceeds in a second, but if you don't mind, so what is your position now? Because when we've talked in the past, you've had about $40 million between cash and inventory. You've topped it up with another 16.6 million US. What position are you with regards to your cash today? I know you've got the convert coming through, but what does it look like today?
Yeah, look, we're going to announce our financials in March. But yeah, in the order of magnitudes that you're talking about, in the 40s, plus this capital raise, you've got the convert at the end of the year. We've got around 20 million of that is inventory. About half in value is uranium that we value at around $25 a pound. And about half is vanadium that we're valuing at $5 a pound, which incidentally is back coming up a little bit. It's last I saw it was in the sevens. Yeah, in the sevens. So we're hoping that we'll get another kick there.
But you're not tempted to sell any of the vanadium today, because it has been as low as 3, it has been as high as 30. But what do you do?
Yeah, exactly. Look. I've said to you that we're trying to do the carbide plan, which is to have inventories that we can deploy when we want to deploy it quickly. And a big part of our plan, our strategy, is to have inventories available, packaged, ready to go. And that's another reason for the financing, because if you had, say, in the order of $40 million of cash working capital, the convert becomes a current liability, then you're down in the mid-20s or so, of which 20 million was inventory. So, we believe we're going to get a bigger bounce out of that inventory, at the right time. So, I understand that, the average person as a shareholder may not fully understand our motives, but those were a lot of the motives. We wanted to keep those inventory because, whatever the government purchases, assuming they purchase inventories, you could get, a 2x or even maybe more than that, hopefully more than that, in flexing up on the value.
Okay, so, well, thanks for sharing your motives with us, first of all. Okay, I appreciate that, and it makes sense. Can I talk about use of proceeds? There's 2 strains here. One I need to deal with.
Yeah.
Are you going to use any of your current cash available to you? You closed yesterday to do any M&A work. Are you going to buy any of your peers?
It's always a possibility. I'm never going to say no, because that's an absolute. But it puts us in a stronger position to do the M&A. But I'll never say no. But I'm not going to say yes either.
So
how's that?
That is very politic of you. But let me ask you another way. Today, are there any plans to do any acquisitions?
Not at this point in time.
Got it. Second strand. You talk in your press release about use of proceeds. Obviously, focus on the ISR project, I assume, because that could get into production soonest. Is that right? What's the order of play? Because you talk about all 4 assets here, but the ISR was number 1.
We've got quite a diversified set of assets, but there's some work at Nichols Ranch that we've got some work with some increasing the flow capacity at Nichols Ranch. We've got some drilling that needs to be done at Alta Mesa. We've got other work that's we're still doing design work on the Canyon Mine. We've got the shaft sunk there, but we've still got to put in some of the facilities around the shaft. So, we're not going to, I can tell you this much, we're not going to spend all that money on until we get a little more clarity on, the outcome from the purchase program. But there are things that are longer lead time that we will, put some money in. So we're better ready than we are now, even though we're as ready as anyone out there.
Okay. You said you are best placed out of the US companies to take advantage of that announcement. So, but you're not ready to go today without spending some money to get everything up to speed. So what does that mean? How much money are we talking about?
No, look at we are we can go today on some of our assets. They're ready to go today. But there are a lot of different variables here and that we don't know in this government purchasing program. For example, are they going to buy inventory? And I think they absolutely should, because otherwise we're going from a sort of a colder start, not a cold start, but a colder start to build up production. And the clarity on who's going to be able to best capitalize on that. That all will drive how much investments required at which site or sites. So there is some some uncertainty of how that would be distributed. The government did say that they thought that this purchasing program would basically go to 2 mines or maybe a little more, but it's not designed to go to 5 or 6 mines. It's not. Now, there could be a few more mines potentially around our White Mesa mill, but it's really focused, in my opinion, on, and when they talk mines, I believe they're talking production centers where you can actually make the yellow cake. So like White Mesa would be a mine in their terms, is the way I believe it, and perhaps 1 or 2 other ISR facilities. So there is absolutely no need to build new facilities with this current demand as we know it today. It should be focused on existing, proven facilities that have a history of delivery that are already constructed, ready to go.